again, if you want to go more in depth as far as learning how to trade, understanding the ins and out of all different variations of double bottoms, ultimate buying setups, and vice versa for sales. All right, mastering the bearish forest. Okay, so how to sell the market, different variations. Now, I know we're going over buy, so these were the first buying setups the market will always give you. Okay, so one more time, double bottoms are the first buying setups the market will always give you. All right, now let's go to the second type of buying setup the market is going to give you. Now, we're going to go, of course, in different variation. Now, with that being said, time frame, as always, we have rules. Okay, let's go over them one more time. Right, all rules. One, your time frame, highest possible time frame for technical analysis, your monthly, your weekly, and your daily. All right, that's the time frame you using to mark down your chart, your technical analysis. This is the time frame you are using to identify these setups, right? Those buying setups. Now, rule number two. Rule number two is the time frame that you are going to use to enter the market. That way you're not worrying about fear of wicked out. You're not even worrying about news. Believe it or not, when you use the 4-hour time frame to actually trade the market, the news mean nothing to you. Okay. Now, you already have an idea of where the market's going to go, especially when you get your price action. The news just cause it to go there a lot faster for the most part. Pretty much that's what the news does. Okay. Now, rule number two, the time frame that you are going to use to enter. All right. So let's put entry time frame. Okay. Entry time frame. All right. So the time frame you're going to use to enter the market, right, is going to be your 4-hour or the H4. Okay. That's the time frame. Okay. Now, with that being said, since you're using the 4-hour to enter your trade, the price action, which is number three. So rule number three, last one. Okay. That's your confirmation, right? Where price is at the zone, right? And it's telling you it is now time to take action. It is your engulfing bar, to be more specific, bullish. Okay. Bullish engulfing, especially when you are buying. Okay. Okay. So the engulfing bar, all right? The bullish engulfing bar. So we go over it again. It's pretty much when you get a bull candle that engulf the last bearish candle. Just please remember, it comes in different variations, okay? Engulf the previous one, just like so, all right? Boom. Entry, stop loss at the last low. These are your three rules, okay? Now, of course, rule number 4 is a must. SL, always at the last low, okay? Always at the last low. Always at the last low. But you get these in first, okay? And then this will fall in line, all right? 4 is very, very important. But once you get the first 3, number 4 is going to fall in line, last low, okay? Now, let's go ahead and go over these different variations of break and retest. So we are talking about the second type of setups. The second type of setup the market is going to give you when it comes to a buying setup. So the first buying setup you're going to get is going to be the double bottom. So equal bottoms, right? And the second setup is going to be a break and retest. Now, for the market to give you that second setup, a previous high have to be broken, okay? So that previous high is a lower high, okay? So lower high is what comes after, a lower low, right? So you got a lower low, then the market goes up to give you this high point, right? and then it falls, right? And then market gives you a lower low to go up. After the lower low comes the new high, right? That's a lower high because it's lower than the previous one. So right here is your lower high, okay? This is the points that you need to get broken so you can take your sell, all right? So here, you're looking for the market to break above, right? Structure to get broken. When structure is broken, you are waiting for a retracement. So I'm going to show you three different type of retracement, just like we went over three different type of double bottom with three different type of price action, right? So for the first one is textbook, right? Where market breaks above a previous lower high, right? And then it comes back to bounce exactly on top of that. Now, remember with our fib, if you watch the previous videos, if you did not, go ahead and check it out on YouTube, right? If you place a fib, a buying fib from structure point low to high, right? This will be about your 50 point, like 50%, a little bit below will be 61.8. Now, I did mention that before. I don't use any other fib levels as far as the lowest is 50 to 68. Of course, it can go higher, but that's the lowest I go. Okay. So I'm going to explain that too, why I use 68 and even all the way up to 80 if needed. I'll explain that to you in the next breaking retest, but let's go ahead and knock this one out real quick. All right, let's just hide this real quick. All right, keep it in the corner for now. So look, we have a downtrend, right? We have a downtrend where the market is falling, where it's giving you lower lows, right? See that? Lower lows and lower highs, right? Now, market stops here at this lower low, went up to give us this lower high and comes back to the same low point. These are equal lows. Now, what we need is the market to go up bullish, right? We want it to go up bullish, to go above this previous low high. Now, I personally do not care how high it goes. Once it goes above it like so, we are now waiting for the market to come back to structure point, right? To come back and tap or touch the previous low high. Once market come back to the previous low high, we are looking for a price action, right? Remember, when in doubt, look to the left. So we look into the left to see what was the last bullish buy that it give us. When the market bought up, what kind of price action did it give us? So if we look to our left, we're looking at the last price action, right? Here, we had a bullish, okay? PA. We had a bullish PA, a bullish price action, okay? To be more specific, engulfing, okay? Bullish PA, a bullish engulfing price action. So we looking for a bullish price action here. So go ahead. First bullish engulfing is when we get a price action that engulf the previous one, just a one candle price action, just like so, right? And once we get this price action, notice that it closed above right here. Now, right there, we enter. Now, when it comes to the breaking retest, right, you already know right off the bat, rule number 4, it's a given, like I said before, right? You enter here, stop loss go at the previous low. We're looking at here, right? So these are the lower lows. So when you enter here, once market give you this bullish engulfing price action, this structure point automatically becomes a higher low, right? Because it's gonna be higher than the previous one, and you're gonna place your stop loss down here. Let's clean up a little bit. All right. When you enter here, your stop loss goes here. All right. Previous low. That's why I said it's a given. That's rule number 4. Like it falls right below it. Okay. And then here will be a higher high because it's higher than the previous lower high. And again, this is a higher low because it's higher than the previous low point. And then so on and so forth. You look for market to continue up to give you a bullish trend where it consists of higher highs, right? And higher lows. All right. Hopefully I am not speaking too fast. Okay. That will be the first variation of a break and retest. That is the second setup the market will give you before it bought up, right? After it double bottoms. That's why I put that there, right? Double bottoms, boom, and then retest. So that will also come in later on. I'm going to throw it in there anyway. When we talk about second entry, right? So first entry will be off the double bottom here, right? And then the second entry will be after the break and retest. So you're able to add on. So once market breaks the previous higher high, you wait for the market to come back around to give you a high low. Again, the retest point with your price action, right? PA, that'll be entry number 3, so on and so forth. But that is the easiest 2 entries the market will always give you. And you can't mess up. It's almost impossible. All right. It's literally almost impossible. Right. Now, it is as easy as I am saying it. Please understand that it is as easy. Okay. No no imbalance, no liquidity, no slippage, none of that stuff. Right. It's just market structure, right? Price action, higher time frame technical analysis, higher time frame zone, 4-hour time frame for entry. Easy. You got 4 hours for your price action to be available to you. All right. And once you take that trade, you don't have to sit there and look at it. You just come back and look at it 4 hours later. All right. There's no need. All right. And no crazy names for zones. It's either a top zone or it's at the bottom of it. Okay. It's just a zone. Your job is to simply read and react. All right. Let's continue. Okay. Again, now we have a different variation of a double, of a break and retest, right? But in the case of this, right, notice we got 1 here. Boom. 2, 3, 4, right? So market hit here. We got 1, 2, 3. All right. We got those 3 hits, right? Boom. If you count this one, you got 4. But it's a 1, 2, 3, 4. But this is the first stop. It went up, came back 1, 2, and 3. Now, you could have taken this one and it went up. Was it a good trade? Yes, it went your way. It just came right back, right? But that's why I said this is a bearish trend. The first possible setup is a double bottom. And also, if I didn't mention that, a double bottom setup is a 50-50 trade. Why? Because the market is still a bearish trend. We have a double bottom possible buying setup. It haven't broke structure where market is now in a bullish trend where it's giving you higher highs and higher low. Okay. It have not yet. So just so you understand, double bottoms, okay, are 50-50 trades. Okay. Because it's still a bearish trend. Now we got, depending on the time frame, you got a ranging or consolidation, depending on how the candle looks like. Right now, let me clean up real quick. All right, so we're gonna look for a break. Right, so just like before, for us to have a buy, for us to have a break, a previous, let's do this, boom, a previous lower high, okay, has to be broken. Okay, a previous one has to be broken to give us a higher high, just so you know. And then when it comes back to give us a high low, that's where we'll get our price action. So now what we're going to get here, right, is market consolidating or ranging within our zone, right? Because we marked this area and we also had marked this because that was the structure point. It stopped to fall. That was a previous low high. Market just happened to be bouncing between the two, right? We know it's still a selling market until otherwise. We pulled the buy based on the double bottom setup. once market itself, okay, breaks. Now, this is something that it could do. It does that often. So I'm going to do this for you. That's why I left it like this. Let's make it red so it could stand out. Sometimes the market will do this. Notice how it broke below and then just to go right back up. All right. It will do that. So we have to simply wait for a setup to be presentable and just be patient with it. Now, once market breaks the previous low high, that's that right here. Okay. We're going to wait for the retest of the market itself. Now, variation number 2, right? Now, we know we typically wait for the market to come bounce off this right here, this zone right here. But this time, that's not what it's going to do, right? Market's going to call its own shot and it's going to fall in the middle, right? So remember when I was talking about our fib, when we place our fib, right? From structure point to structure point, 50% is the middle, right? Sometimes it falls to 60, right? Now, also, sometimes it falls 70. That's why I said my lowest time frame is 50%. Anything after that is free gain. It's just a deeper retracement. If it continue to fall, oh well, right? Now here, like before, we are waiting for a price action. So we always look to the left to see what price action the market give us to go up. Now, if you study, if you have this book, right, you will have an understanding of all 6 different variations of the bullish engulfing price action, right? So you already know what you're waiting for, right? So if this is our last selling candle, okay, boom, and then this is our PA, right? So just like before, okay? In the case of this one, the market itself, it got engulfed by the second bullish. So it took two, let's go blue. It took 2 bullish candles to engulf the previous bearish candle. Here is our entry, okay? This is our entry here. Make sure you can see this while I'm writing. This is our entry right there. And then again, we're going to look at the last low for our stop loss, SL, right here. See that? Like I said, it's a given. This is a break and retest where the market dipped at least 60 to 71% lower. See that? Straight to the point. You take your trade. Again, rules, right? This setup itself would be either based off the monthly or weekly. Last one, daily, right? Your entry time frame would be the 4 hour, okay? H4. And then your price action will be the engulfing. All right, let's make it specific. Engulfing. PA. All right. Please remember, engulfing mean, right? Buyers have now engulfed sellers. We have taken over. Once they tell me to take over, it's not my job to think. I just read and react. The only thing that I'm doing is like, hey, I have a price action. My stop loss is at this point, right? I have X amount of money in my account. I want to make sure I'm not over leveraging using a too big of a lot size where my stop losses be too far because it will be too much money. That's why I say too far, but it's where it's supposed to be. But because you're using too big of a lot size, it's like, half of your account, you're risking that. Okay. You don't want to do that. But other than that, boom, take it to the top. All right. It's very simple, straight to the point. So lower lows. Okay. By the way, these are the same. Just like that. Oh, right here, you got a lower low. That's lower than the previous one. All right. So let's go ahead and look at the last one. So I'm covering 3 for each one. Okay. All right. So same concept, downtrend, right? In the case of this one, market is here. It did not give us a clean double top per se where it hit the zone exactly. Just so we go back over the the setups again. Higher time frame, it's a monthly setup or a weekly setup or a daily. Okay, what I mean by setup, this breaking retest we're about to get is happening on the monthly, or it's happening based off the weekly structure or the daily. That's following our rules. Okay, and then for 2, we know we go into the 4 hour for entries. Okay, H4, and 3, price action has to be the engulfing, right? Telling us now market have not taken over. To be more specific, bullish have taken over. You know, rule number 4 should be a given. You know what? Let's throw that in there. It should be, but hey, rule number 4, stop loss. Last, okay? Please understand, last low when you are buying. So these are your buying rules, okay? Only thing that change will be the engulfing. Either it will be a bearish or bullish engulfing, and it's definitely your stop loss. If it's a selling, it is your last high. Okay, straight to the point. Okay, all right, let's knock this out. Ooh, put this back. Missing something here. This zone is needed. Okay, so cool. Look, we have a turnaround point here, and the market went up, right? But this time around, the market didn't exactly hit our zone the way we needed to. Came here, bounced off this lower high, right? Range. You see that? See how it's stepping up? But it's at the same level. It never truly broke structure. Here, now it broke this and this one. Now, we're waiting for a retest level. So now at this point, okay, we have more than one retest levels. Let me show you what I mean. All right. First one is right here. Okay. The second one is right here. The third, right here. Fourth, right here. And then we have the last, the fifth one, okay, which is down here. Okay. And that's what we're going to touch. What I'm about to show you is sometimes when you get a break and retest, a lot of time, okay, let's go with this one here. Why not? Right? A lot of time, market, even if you have a fib, even if you have a fib for Fibonacci place for the retracement, sometimes the market will come all the way down. Like so. Right? Let me make it look more attractive. It'll do this. Okay. Boom. See that? Matching this previous low and then to go up. Okay. Let me get rid of this right here. Okay, you see that? So it is a break and retest. Market did break a previous lower high. Both, actually 2 of them, right? It broke a previous lower high. It's just the retracement went back to ground zero. Okay. Let me show you. So the only difference with this one was I didn't take the buy on this because it didn't give me a price action until way later on. All right. So look at GJ real quick. I took the sale off that. Pays pretty good. Come on, buddy. I'm about to show you the same setup, right? So how when it came to the 4 hour, how market broke structure, right? You could already see it already. It broke structure to come back. Come on. I don't need this. It'll pop up. Like my zone should pop up soon. But even if it doesn't matter, right? Check me out. Look. So we know this was our previous high point, right? Market range or consolidate, right? And it broke. See that? It broke structure. So we have areas the market could come to, right? To buy up, right? Look what it did. You see that? It broke. It came back to that zone to go up. The only difference is when the market opened, it opened gap. it opened at the bottom and then to go up. So my only entry was right here because it took 3 candles to engulf the last bearish candle. But do you see what I mean? It's the same thing, right? It's the same break and retest, right? It's the same break and retest. Broke above, right? And let's go black so it can stand out a bit more, right? And it comes all the way back down to the previous, to be exact, right? High, low. Then to go up. See that? I didn't make this up. That's what the market gives you. As long as you understand what you're waiting for, you should be just fine. Excuse me. As long as you understand what it is exactly you're waiting for, you should be just fine. Okay. So I just wanted to pull that up so you could see the market itself, the chart itself giving you just that. All right. This is the GBP JPY. This video will be put up today. So when you do see this, go ahead, back test any pair. You will see these different variations. Okay. All right. Let's go back to, oh, look at that. You see that? Zones, all the zones were there, placed the way they're supposed to, and they drip below, and then boom. Okay. So let's get back to this real quick so we can wrap this up. All right. So that is our 3 variations when it comes to double bottoms. As you can see, 1, equal bottoms, right? 2, where the previous one or the next one does not hit the zone exactly, right? 3, where it breaks a bit below it, right? 3 different variation and with 3 different price action. Okay. Let me do this real quick. I don't need that. All right. Back to it. Okay. Now look. So first we have equals with a single bar, bullish engulfing, where it took 1 candle to engulf. 2, we have a double bottom where the second hit did not exactly hit the zone. And we have a 3 candle price action where it took 2 bullish candles to engulf the last bearish candle, giving us the bullish engulfing that we need to go to the top, right? And then variation number 3, right? We do have market coming back to a zone. The only difference is it drip a bit below. And then we have a very unique price action where we get 1 bullish engulfing that engulf the last 2 selling candles or the last 2 bearish candles and then to go up, right? And then touching up. So these right here was the first setups, okay? The first buying setup were the double bottoms, all right? Now, setups 2, after a double bottoms comes a break and retest. First textbook, break and retest. Market breaks and come back and touch the previous low high. That's exactly 50% if you're placing the fib from the low to the high, okay? I guarantee you, but 95% of the time, it will always be 50%. But like 95% of the time, if you place a fib, right? So same concept, you got a break and retest where market had to break a previous low high, right? And then to give you a high low, that's where your price action would be after it gives you a higher high. That retest point, right? That's your entry right here. At here, we got a 1 candle price action again, where we get 1 bullish candle that engulfed the previous one. Okay, that's variation 1 for our second buying setup after a double bottom. Here we got a consolidation or ranging depending on the time frame, how the candles look like. Now, before the market breaks above, it broke below. I promise you, man, it cooked a lot of people with this. Okay. And then to finally break above to give us a higher high. And then high low with a bullish engulfing, not any bullish engulfing, variation 3, where we get 2, where it took 2. Okay. Slow down a little bit. I am so sorry. Where it took 2. It took 2 bullish candles to engulf the previous bearish candles for us to enter. Again, I'm going to repeat this one more time. All right. Before the market buy, it will always give you a bullish engulfing. I don't care who says anything else. I guarantee you that. Tell them I said it. Even you could prove them wrong. All right. Tell them to pull up the chart tell them to pull up any pair. I guarantee you will always get a bullish engulfing. Okay. And last one is where, oh, one more thing with this, right? This one, market itself broke structure, but it did not bounce exactly off the 50% retracement or of the previous low high. Instead, it dropped at least 60, 61.8 or 70% retracement, where it's in the middle of the ranging. Okay. So a different variation of break and retest. Okay. Learning to understand these type of setups are very, very important. Okay. That way you won't be in a hurry. And also, if you use the proper time frame for your entry, it's literally close to impossible to get tricked out. Okay. Now, last variation as far as what I'm going to go over is when the market itself goes all the way back down to tap the previous lower low to give you another double bottom after the break. All right. So here is the break. Okay. You got a break here. And then your retest, okay, came all the way back down to that same bottom zone. All right. It ignored all of these. Sometimes it will do this. Okay. You know, tricking you out. But hey, that's it right there. And that's exactly what we just went over. I wish, you know, that one did that. You know, it would have been, that pull would have been a lot easier. That's yeah, $1,500 with a $5 lot size with the GJ, buying it with the first bullish engulf. And if it did came down accordingly, the way I would like it to. But yeah, late entry still paid at least $1,000. I mean, $750 with the $5. Okay, so here you're looking for your bullish engulfing. Let's cover that real quick. In the case of this one, right, we get the last bullish engulfing, right? We get the one special bullish candle that engulfed the last two previous selling candles. Okay, just always remember our selling candles look different, so we learn to understand them. All right, and that is it for this video, man. I really appreciate you guys. I really appreciate the support. Like before, all right, books are now available on Amazon. Just type in Royalty FX Academy. You'll find me. I am also on Instagram. Okay. _ Royalty FX Academy _ I am also on Twitter. Come on, show me some love. Like and share. Feel free to comment and ask me anything that you want. And I can make a short 10, 15-minute videos answering questions that you may have about your pair in particular. All right. With that being said, y'all, I'm out.